Lucid Motors is one of the hottest electric vehicle startups that has gone public. The company makes luxury electric cars, namely the Lucid Air, a vehicle that can get up to 1,200 horsepower and 520 miles of range. It boasts some of the fastest charging speeds in the industry and starts at $90,000, quickly rising up to a whopping $250,000 in price for the Sapphire Edition. Lucid stock came to market on July 26, 2021 through a SPAC merger which was announced in February of 2021. The stock immediately shot up close to $60 per share after the SPAC announcement and later tested the highs once again in November of 2021, a few months after the merger had been completed. However, since then, the stock has been in decline, falling to $13 per share, down 70% in 2022 alone, but still holding a market cap of almost $22 billion today. With the CEO Peter Rawlinson at the helm being an ex-Tesla executive who was the former lead engineer of Tesla's Model S program, there's certainly still a lot of promise in store from this company, but will it live up to the hype? And before we continue, stop using Yahoo Finance, stop using Google Finance, and have a look at our website, themarketisopen.com, where we have instant stock quotes and financial data going back 10 years, and it's all freely available. Lucid Motors has actually been around much longer than it seems. It was created in 2007 under the name Ativa and founded by Bernard C., Sam Wang, and Xiaopeng Lin, the former of which served as a VP and board member at Tesla from 2003 to 2007, indicating deeper Tesla roots than just CEO Peter Rawlinson. In its early days, Ativa focused on designing battery technology, powertrains, and control systems. They only set out to build their first car in 2014, which appeared to be followed by mass hiring of ex-Tesla executives and engineers. Coinciding with the name change of the company to Lucid Motors, they made an official announcement in October 2016 of their intent to bring an electric car into production, with a planned factory location announcement a month later for capacity of 20,000 units by 2018, followed by a ramp-up to 130,000 vehicles per year. However, the company ran into financing issues which completely delayed all of their plans for the project. Funding had dried up for a competing player, Faraday Future, which had begun its collapse and set a negative tone for the industry. It just so happened that the billionaire founder of Faraday Future, Jia Yuting, was also the founder of LeEco, the Chinese company that had poured hundreds of millions of dollars into Lucid Motors. Lucid needed a lifeline and got one in 2018 when the Saudi Arabian Sovereign Public Investment Fund invested $1 billion into Lucid Motors and also bought out Jia's stake in the company. This gave control of Lucid to the Saudi fund, which was working to build a greener, non-oil narrative for itself and at the same time compete with the Tesla Model S. Then in 2021, Lucid merged with the Churchill Capital Corp 4 SPAC company, a special purpose acquisition company that was basically a block of cash waiting for a merger deal. In this case, Lucid was able to combine forces with a blank check company in order to get listed onto the stock exchange and at the same time get a massive cash inflow of $4.4 billion, giving the combined company an astounding $24 billion valuation. Now, since then, Lucid stock has been on a roller coaster ride, but today resides just below its initial valuation with a $22 billion market cap. However, in a recent interview by Tesla owners Silicon Valley, Tesla chief Elon Musk said that unless something changes significantly with Rivian and Lucid, they will both go bankrupt. They're tracking to bankruptcy. Now, both Rivian and Lucid are some of the largest US-based EV startups to have been listed on the stock market, trying to gain mind share in the electric vehicle space. Now, Rivian, which is focused on trucks and SUVs, is also off to a slow ramp-up, but the company is slightly larger than Lucid and has about $16 billion of cash on hand. While it's burning cash like crazy, they can sustain themselves for quite some time. Lucid, however, appears to be worse off, having production trouble of its own, and they're now down to $3.8 billion of cash, which seems like a lot, but not when considering that this is down from about $6.2 billion from just 9 months ago. The company finally built and completed its planned factory in Arizona in 2020, promising an eventual ramp up to 400,000 vehicles per year. However, fast forward 2 years to August of this year, 2022, when Lucid reported its Q2 earnings, they slashed their production outlook for the second time this year. Lucid now forecasts that it will produce 6,000 to 7,000 cars in 2022, down from its prior guidance of 12,000 to 14,000 due to supply chain and logistics challenges. At the beginning of the year, the company anticipated making 20,000 vehicles. Lucid also reported second quarter revenue coming in at $97 million, far short of the $147 million that Wall Street analysts expected. During the earnings release, Lucid CEO and CTO Peter Rawlinson noted that we've identified the primary bottlenecks and we are taking appropriate measures, bringing our logistics operations in-house, adding key hires to the executive team, and restructuring our logistics and manufacturing organization. Now, going from 1 car to 10 cars is very different than going from 1,000 to 10,000, for instance. The supply chain, logistics, even software, and more all needs to change or be rewritten to adapt to the new level of scale. Bottlenecks begin to occur in many different areas as growing pains become evident, and Lucid is only now beginning to experience this, which has already drastically impacted their near-term forecasts. One of Elon Musk's criticisms of Rawlinson was that he had left Tesla just as things got tough, which Elon was not happy with. Now, Elon Musk is someone who works 80 to 120-hour work weeks and sleeps on the factory floor in order to make sure things get done properly and on time. But maybe that's what it takes to run a successful car company, and there hasn't been a new car company created in the US within the last 100 years. So Peter Rawlinson and team are just now entering one of the most difficult phases of a vehicle company, which is beginning the first production ramp, which has a high probability of failure due to the spending needed to ramp up. Even Tesla didn't call itself a real car company until 2018, when it was producing 5,000 cars per week, achieving sustained positive cash flow, something that Lucid is still very far away from. One of the key metrics that backs Elon Musk's aforementioned statement about Rivian and Lucid tracking to bankruptcy unless something big changes is negative gross profits. Lucid loses an obscene amount of money on each car that they sell. In the quarter ended September 2022, they made $195 million in revenue, but to earn that revenue, it cost them $492 million. That's devastating and not something that can be made up in volume, as the old saying goes. They delivered about 1,400 vehicles in the quarter, which means their average selling price was about $139,000 per vehicle, but it cost them $352,000 to build each of those vehicles. This is completely unsustainable and doesn't even include operating expenses like research and development or sales, general, and admin, not to mention other expenses. If we look back at Tesla in 2012, a time similar to where Lucid is today, having just begun the ramp-up of the Model S, Tesla did have some negative gross margin quarters, but for the full year in 2011 and 2012, their gross profits were positive, meaning the vehicles themselves were actually profitable back then. Even though the company lost money as a whole, they were structurally profitable. They just needed to overcome the difficult task of increasing production in order to flip to profitability. And it still took years before Tesla actually became profitable. It should be noted that Tesla was closer to a $5 billion company back then. Lucid is in a different situation with a $22 billion valuation, and the more cars they produce, the more money they lose by at least a factor of 2.5 times as seen in the most recent quarterly results. The company is actually structurally unprofitable, something that Tesla was incorrectly classified as by short sellers. It's safe to say that Elon Musk is correct that Lucid is tracking to bankruptcy given this immense negative gross profit, and unless something drastic indeed changes, they will eventually run out of cash no matter how many billions that they have in the bank. That said, in August, Lucid Motors spooked investors in the second quarter earnings presentation when they said their $4.6 billion of cash would last them well into 2023, which was just around the corner. They've since updated the wording here in the most recent third quarter results, saying that now $3.8 billion would be sufficient liquidity at least into the fourth quarter of 2023, which is still just a year away. They're also beginning to build a second factory, but this time located in Saudi Arabia. We've been critical that Rivian is already starting on its second factory without finishing the first, but this takes it to a whole new level. Again, Lucid's first factory is still fraught with production bottlenecks and issues. There's no sense in replicating that before ironing out the kinks, not to mention that this will cost even more money for the company. At a time when they should be cutting back to reduce costs and making sure they survive this ramp up, they are instead doubling down on the spending. Also, if they're having production trouble in the United States, then Saudi Arabia will be orders of magnitude worse with absolutely no established supply chain. If we look at where Tesla is building their factories today, the US, China, and Germany, this is where the vast majority of cars are already being made, meaning easier access to components, experienced engineers in the job market, and the customers are there too. These are the largest consumer vehicle markets in the world. According to Statista, the size of the passenger vehicle market in Saudi Arabia is expected to reach $12.7 billion this year in 2022. Lucid says that their new factory will begin by serving the local market, and it will have a capacity of 155,000 vehicles per year. Now, Lucid sells on average $140,000 luxury vehicles. If we multiply that out, we get $22 billion in yearly revenue, which is double the size of the entire $12 billion passenger vehicle market for all of Saudi Arabia. So this factory already makes no sense, especially since the market for luxury cars isn't well supported in Saudi Arabia. They will quickly have to export vehicles, which will add to their costs, especially with the aforementioned lack of infrastructure. Lucid also can't reduce the cost of its vehicles since its current cost structure is out of control. If anything, they need to triple vehicle prices in order to get closer to break even. Moreover, Lucid is centered around efficiency, which is echoed by Peter Rawlinson throughout his many presentations. However, there are some key areas where Lucid strangely seems to have a lack of efficiency. Starting with the motors, Lucid's in-house designed motor claims to be one of the best in the industry. It has a lightweight, compact design, generating an astounding 670 horsepower and weighing just 74 kilograms, including the inverter. On the other hand, Tesla's carbon-sleeved plaid motor is said to generate just 400 horsepower and weighs 95 kilograms, giving Lucid much better specs in these two areas. But for some reason, this doesn't translate well when put into an actual vehicle. The Tesla Model S Plaid uses a triple motor setup that has 1,020 horsepower in total, whereas the Lucid Air Dream Edition can get up to 1,100 horsepower with just two motors, which saves a lot of weight not having the extra motor. However, when the rubber meets the road, the Lucid Air can accelerate from 0 to 60 in as fast as 2.5 seconds. Yet the Model S Plaid pushes the boundaries with a sub 2-second acceleration. So in fact, Tesla seems to have far better efficiency when moving from the theoretical to the practical. Now this may be due to a multitude of reasons, one of which is that the horsepower measured may be the peak horsepower at a specific RPM, whereas the Tesla Plaid motor seems to have some magic built in that keeps the horsepower curve flat instead of degrading after a certain speed like in typical motors. So using one number to represent horsepower has never told the full story. Additionally, a higher horsepower is technically less efficient because the vehicle is outputting more power, which drains the battery faster. If you can achieve better performance without requiring as much power, then the vehicle is more efficient. So Tesla still seems to have some tricks up its sleeve. Now, in terms of the business itself, the pricing is a very important part of marketing. Lucid will be coming out with a $250,000 Sapphire Edition, which is supposed to have performance that trumps the Model S Plaid. However, at that price, it's actually a Tesla Roadster competitor, which puts it in a different class. Rawlinson says, Sapphire represents the pinnacle of electric performance, finally achieving the performance that I've so long searched for. After painstaking development work, I'm able to confirm Lucid Air Sapphire has achieved a satisfactory performance, and I trust the most discerning drivers will agree. The vehicle will have over 1,200 horsepower and should be able to beat the Plaid 0 to 60 acceleration time of under 2 seconds, along with some other performance features. But interestingly, in Lucid's third quarter earnings report, they posted some testimonial headlines from various news sources with the phrase Tesla Model S Plaid mentioned in over half of them. This is an iPhone killer type analogy, where mentioning the competing product tends to make customers look at that competing product for comparison before making a purchase. Despite Lucid's claim about efficiency, Teslas are actually significantly cheaper than all of Lucid's products given the desired specs. For instance, the Model S Plaid starts at $135,000, about $35,000 cheaper than the slightly more comparable Lucid Air Dream Edition. Tesla's head of investor relations, Martin Viecha, posted a very much related tweet stating that when investors think about innovation, they usually refer to creating the best product, but that's only half the story. So much innovation is directed at cost reduction, figuring out how to reduce cost of something beyond what others thought was possible. Now that's innovation. And so Lucid is sort of building vehicles and disregarding cost, as we can see from their financials. Another example is that Tesla has refined vehicle software, but in addition to that, they've built in 8 cameras into all of their vehicles, technically allowing any one of their cars to enable their full self-driving capability. They also cut costs by removing the now unnecessary radar and ultrasonic sensors that have been replaced by software. Comparably, Lucid has something called Dream Drive, which requires every sensor imaginable. They have 14 cameras, 5 radar units, 4 surround view cameras, ultrasonic sensors, and even LiDAR. Now adding sensors adds more complexity, more sources of failure, and much higher costs. This also means that the sensor suite is only available on a subset of their vehicles, along with their Dream Drive product, which has yet to be tested at any sort of even small scale on the road. So they've basically invested in all of this technology that just a small subset of cars will actually use. And so Lucid may be taking on too much in order to try and copy or beat Tesla, and they may be setting themselves up to be trampled by a very fast-moving and much larger, disciplined company. Lucid is also talking about making battery storage systems, which again sounds very familiar, but they barely sell any cars yet. The company is trying to be everything and everywhere at the same time with limited resources, and they're spending money at lightning speeds. So do you think Lucid Motors has a bright future, or are they making the classic mistake of growing too fast and trying to accomplish multiple feats at once instead of focusing on the few things that they do best? Don't forget to check out my video on the decline of Rivian, a company that has many similarities to Lucid Motors. Please hit the like button and subscribe, we would really appreciate that. And a huge shout out to all of our patrons that help to support our channel. Your support helps us to continue to make great content. Thank you guys so much for watching.